Wouldn't it be a shame if you're just like a couple of dollars? And some of this stuff works like a cliff, a couple of dollars off that you think you're gonna make maybe 40,000, and it turns out that you missed out on the cost sharing reduction because you didn't estimate that you were gonna be at $39,900 or something silly like that. What's going on, guys? Welcome back to the channel, or if this is your first time at our channel, welcome to the channel. My name is Travis Sickle. So this video is specifically for small business owners, independent contractors. If you're getting a 1099, you're an independent contractor, this video is for you. And I want to talk about health insurance, but I want to point you in the direction to look at the healthcare.gov, the marketplace plans, also known as Obamacare. You really have three options, so to speak, or I guess a fourth one. So the first one is the healthcare.gov marketplace plan. You can look at some private coverage, or you can look at these cost sharing plans that are not insurance technically. And also that fourth option is not having health coverage at all. So I want to look at what you might be missing if you're looking at one of these marketplace plans, because depending on how you earn and how you structure your business entity throughout the course of the year could dictate how much you're going to pay for one of these plans. So sometimes you're looking at some of the MSRP pricing of a marketplace plan and they look sky high because they are the MSRP, what you'd pay if you weren't dealing with any of the premium tax credits or the cost sharing reduction. So I want to talk about those two pieces because it's going to have to deal with estimating your income. And as a small business owner, it's probably one of the hardest things to do. And I was talking to somebody about a week ago on this and how to estimate your income. And it just was basically like, yeah, estimate your income on what you think you're gonna make. And as a small business owner, that's like very difficult to project, especially if you're just starting out. Like you can have hopes and aspirations of how much you're going to earn. Then when I tell you that projection that you're coming up with, the idea that you're just gonna have this goal will also affect what you actually pay for your health coverage. Again, I wanna talk about these two parts first. For the health coverage with the marketplace plans, there's two parts to the cost. The premium tax credit, which a lot of people talk about getting help for the subsidy of paying for your actual premium. So if you can get your adjusted gross income below a certain threshold, then you can get more of the premium tax credit. But there's this lesser known part of it that not a lot of people talk about, and that is the cost sharing reduction. So I want to talk about both of these plans and estimating your income. But let's talk about the cost sharing reduction. So here's the website from healthcare.gov, because who's going to say it best but the definition. So basically the cost sharing reduction right here, it says basically that you're going to pay for deductibles, co-payments, and co-insurance. So that means you can actually have the same plan, but pay a different co-insurance or a co-pay. So it's saying the deductible, your deductibles could be lower, could be zero. You could have no deductible with the same plan, depending on what your income's at or your projected income is at, versus somebody else who projected their income a little bit higher. They could have a higher deductible for the same plan. Now, this is just not talked about enough that you can actually have the same exact plan. It's not a different set of plans. It's literally the same plan. You can have the same doctors on the same plan and pay a different deductible or a co-payment or the co-insurance, and it has nothing to do with the premium tax credit. So this part, as you can see in quotes, it says right here that the cost sharing reduction is basically, in quotes, extra savings. With the cost sharing reduction, I don't know what your price of your cost sharing reduction is going to be because it depends on what plans and your house, it depends on your household size. And then you have to go through the actual marketplace to see what plans are even offered in your particular area. And the same plans will have different pricing depending on where you live and how much you earn. So there's so many different factors that are going to affect it, but you want to pay attention to this cost sharing reduction. Now there's one strange part about the cost sharing reduction that you're going to want to understand. I'm going to talk about it a little bit more, but let's jump over to estimating your income with the premium tax credit. We're going to come back to this. So this is the page on how to estimate your expected income. There's a ton of stuff here that says, look at your adjusted gross income, but don't really look at last year's. It says not last year's income. That's not last year's income. It's what you're projecting to make this year. There's just no facts behind this on what you should actually project. So there's a fine line. You're basically going to guess at this stuff in a nutshell. And if we scroll down, estimating unpredictable income. So look, they said it right here. If you're unemployed, if you're self-employed or on commissions, I mean, most people who are on commissions are probably independent contractors or on a work schedule that changes regularly. So that is going to be for the marketplace plans. So if your income is hard to predict, This is what they're telling you. Base your estimates on your past experience. So if you don't have any, you can't base it on anything. Recent trends, I don't even know what that means. You're just gonna Google like what you earn or what you know about possible changes at your workplace and similar information. If the job is new to you, ask people in the same field, in the same company about their experiences. So basically it's saying you have to make it up. I would go through the plans multiple times and look at the different income levels. Now, what I'm just showing you is predicting your income, which will affect both the premium tax credit and the cost sharing reduction. Now, here's what you really need to know. So the premium tax credit, if at the end of the year, let's say that you made 10 times the amount that you thought you were going to make, and you took the premium tax credit up front, then you're gonna have to pay it back because it's based on what you projected your federal income tax to be, what you're going to earn. Even if you're an S corporation owner, it does not matter because your distributions will get added to your federal taxes, which will increase your taxable income, meaning that you're going to inevitably have to pay back whatever the premium tax credit that you applied for and received. So another alternative is just don't take it up front because when you do your taxes, if you did qualify for it, then you'll get it in a refund. That's one thing to think about, okay? So the other part is the cost sharing reduction. So I just walked you through the premium tax credit. If you projected X and earned 10X, so clearly you're not gonna qualify for that amount, so you're gonna have to pay it back because your taxable income was higher. But that same estimate, if it was too low for whatever reason, you didn't think you were gonna make that much, you made a mistake, or maybe you got most of your income in December, and so all through the year, you were struggling to get your business up and running, maybe it's your first or second year in business, you're not making a whole lot of money, but then all of a sudden it took off at the end of the year. So at that point, again, your federal income tax is going to be significantly higher in that same scenario. You don't go back and get a new plan. You don't have to change your cost sharing reduction. You don't lose the cost sharing reduction retroactively. Now, a point to note on this, you are required if your income increases and you know it's increasing to report the change. But in the example I just said, if it happens in December and you weren't expecting it, you would be foolish to think in January that you're going to make a bunch of money if you really didn't think, that was your goal. So there's a huge difference here between projections and goals. Now, things that you would want to include as self-employed, a small business owner, if you're an S corporation, you're paying yourself a salary. So that is what you're going to include day one because you're saying to the marketplace, I have a job, because you do, because you're an employee, even though you're the employer at the same time, you're the employee. So that W-2 wage that is coming to you should be included. But as far as the distributions go, you're not really certain how much distributions are in your S corporation. So it's really difficult to necessarily project what your distributions are gonna be. Now, again, you might have goals, you might have aspirations, but when the rubber meets the road, you wanna make sure that you're estimating appropriately, because what doesn't occur is if you put in what your goals are, your aspirations, and you fall short of that, they don't go back and then change your plan to then give you the cost sharing reduction. There are just so many different scenarios here. Like, what if I make a ton of money in January or February? What should I put if I don't think I'm gonna make that money for the rest of the year? You're just gonna have to rework these numbers and make updates as necessary. But at the same instance, you don't wanna jump from plan to plan to plan, because every time you jump on a new plan, you're getting a brand new plan. It means a new deductible and all the other stuff that goes with it. So get familiar with these numbers, because wouldn't it be a shame if you're just like a couple of dollars, and some of this stuff works like a cliff, a couple of dollars off that you think you're gonna make maybe 40,000, and it turns out that you missed out on the cost sharing reduction because you didn't estimate that you were gonna be at $39,900 or something silly like that. Look a little bit closer. Two parts to it: cost sharing reduction, premium tax credit. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.